Hey everybody, welcome to Strategy Now here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Watching the midday action, seeing all the major indices right now at their best levels or right off of their best levels. You have the Dow over 20,000. The NASDAQ futures are right now at 5176. You have the S&P 500 at 2287.50. The dollar is still slightly up, crude is down, and the markets are chugging along. So what I wanted to take a look at is see what strategies are really catching the eye of the market right now. And there's been some bullish activity and some bearish activity I want to bring to light. And I'm bringing these strategies to your attention only because they're interesting. Also, they give you a kind of a different viewpoint than just being long or short stock outright. And the first one I want to take a look at is Alexion Pharmaceutical. Now, ticker symbol ALXN, the February 135 calls, they traded 2,480 times today. Now, the open interest before that was 1,540 contracts. So we've almost doubled the number of contracts that were previously traded. We did see that implied volatility, which is that forecast of potential violent moves, is at 54%. That's basically right now about a 6% increase than what we saw yesterday in Alexion and at this strike price at 49%. There was nearly 2,200 contracts that were traded in one transaction. That means that there is someone that is willing to take delivery, because the deliverable on one call contract is 100 shares, of over 22,000 shares. Now, the company is confirming that they are reporting on February 16th for earnings. So this could be an earnings play, and they're looking for some upside. Another bullish play that I saw being played out and strategically placed was in Host Hotels and Resorts. Ticker symbol is HST, and I saw the Feb 18 calls. They traded 2,500 times. That's 2,500 contracts. And the open interest, in other words, the number of open contracts to either buy to open or sell to open, were 4,860. So there was ample open interest. But there was an increase in implied volatility today, about 2%. It went from 25% to 27%. So there's a little bit of a spike in the implied volatility or expectation of potential moves in HST. Now, the company is confirming reporting their earnings on February 22nd. So there is a binary event that could be a catalyst to the upside. And that's before the open, but one note, it's after. They are reporting after expiration. Expiration falls the Friday previous to the 22nd. So they're expecting a move before earnings. And that could happen, especially since some of their peers are going to be potentially coming out, and if that sector starts to move upside, Host Hotels could move to the upside beforehand. Their risk, though, on those $18 calls that they purchased in February is the debit they paid for it. Another bullish transaction that I saw was in McDonald's, ticker symbol MCD. I saw the March 120 calls. Now, 2,890 contracts traded. And now there's ample open interest. Over 18,900 calls have traded so far in the March 120 calls. Implied volatility is only up about 1%, but over 2,000 of those contracts that traded today were one single transaction. Now, the company already reported earnings and is expected to report in late April. So these calls are going to expire before McDonald's has a binary event like earnings. There is an investor meeting on March 1st. So there is an event that could potentially catalyze the market. And they're going to present at another conference on March 14th. So it looks like a strategist could be positioning in front of those two events, buying options, specifically the 120 calls, rather than buying stock in front of these events that could be a catalyst either to the upside or downside. But if you're positioning on the long side on these calls, it's to the upside. Now, some bearish put activity that we saw today is in BioCrest Pharmaceuticals. Ticker symbol is BCRX. I saw the February 4 puts, 5,200 traded today. Previous open interest, 390 contracts. So you see a huge number of contracts being traded today. Implied volatility jumped almost 100%. It was previously at 218%. So you can tell that this one moves either way. It's now, this strike price is being run at 310%. Folks, what's that telling you? That's telling you that there is a huge possibility that this stock could move very violently between now and February expiration. Now, over 3,600 of those 5,000 contracts traded in one single transaction, and it's expected to report earnings in late February. Now, biotechs have been on the move, and this expiration cycle is outside of when they actually report earnings, but if biotech gets a bid, this one could move to the outside. Last one I want to take a look at, and it was another bearish transaction, it looked like, was Cliff Resources, ticker symbol CLF. The weeklies, they're expiring on February 10th, the $9 puts. They're seeing interest ahead of earnings this Thursday. So they're expiring this Friday, and they're announcing earnings, CLF, on the 9th, right before the open. 3,450 of the puts traded. Now, open interest, there was 2,550 puts trading before this that were open. So we basically have more than the open interest trading today. Implied volatility up about 10%. So there is a heightened expectation of potential move, but not a huge one. There have been some merger and acquisition headlines that have been, and some speculation that's been circulating. That was last week. We're going to keep an eye on that, but it looks like in front of earnings, there could be some hedging going on, especially since the market has had low general implied volatility, but we could see Cliff Resources at 116% implied vol for this particular strike line. That's a pretty significant volatility. All right, folks, that's it right now for strategy. Now, I'm going to be back with Tech Talk at 3:30 Eastern Time, so join me then here at MarketStream.live. Have a great day.